turning $1,600 into $300 million in just a decade. Sounds impossible, right? But one man actually did it. And he didn't do it with insider info, secret connections, or a Wall Street background. He did it with a simple, rule-based system that anyone could learn. That man is Richard Dennis, one of the greatest trend-following traders in history. In today's video, we'll break down 3 things: who Richard Dennis really is, the essence of his billion-dollar trading system, and how you can apply this system automatically. No manual math, no guesswork. Let's begin. Part 1. Who is Richard Dennis? If there's one trader whose story sounds almost too good to be true, it's Richard Dennis. He was the ultimate trend follower, a man who made hundreds of millions of dollars not by predicting the market, but by listening to it. In the early 1970s, Dennis was just a young man from Chicago, barely in his 20s, fascinated by the markets. He wasn't born into wealth, didn't have Wall Street connections, and didn't come from a financial background. What he had was an idea that if you could follow the trend, not fight it, you could build a fortune from almost nothing. He started trading at the Mid-America Commodity Exchange, a smaller futures exchange in Chicago, because it allowed traders to trade in mini contracts. That was perfect for him because he didn't have much money. Dennis began with just $1,600, $400 of his own savings, and $1,200 borrowed from his family. At the time, $1,600 wasn't much, even in the 1970s, but Dennis had a plan. He would trade futures contracts, markets like soybeans, wheat, sugar, and gold, and apply a simple principle: ride the trend as long as it lasts. And it worked. Spectacularly. By following those trends with strict discipline, buying when prices broke out, and cutting losses quickly when they didn't, Dennis reportedly turned that tiny $1,600 stake into over $300 million by the early 1980s. Adjusted for inflation, that's more than $1.2 billion today. He became known on the Chicago trading floors as the Prince of the Pit. He wasn't some quiet analyst in a suit. He was in the pit, shouting orders, surrounded by chaos, yet executing his system with military precision. But what made Richard Dennis truly legendary wasn't just the money he made. It was what he believed about trading. By the early 1980s, Dennis had a close friend and fellow trader named William Eckhart. Eckhart was a mathematician, analytical, logical, and skeptical. The two were brilliant, but had one big disagreement. Eckhart believed that great traders were born with a natural instinct, a kind of gut-level intuition that you couldn't teach. Dennis, on the other hand, completely disagreed. He believed that trading wasn't about instinct or IQ, it was about rules. He believed anyone with the right mindset and training could become a successful trader. To settle the debate, Dennis decided to run an experiment, one that would become one of the most famous in trading history. In 1983, he placed an ad in the Wall Street Journal and a few other publications, inviting people with no trading experience to apply for a unique opportunity, to be trained as professional traders. Thousands applied. Dennis carefully selected a small group, just a few dozen men and women, from all kinds of backgrounds. They weren't finance people. They were engineers, a security guard, a blackjack player, an accountant, even a professional musician. He brought them to Chicago, trained them for just 2 weeks, and taught them his exact trading system, a set of mechanical rules based on price breakouts, position sizing, and strict risk management. After training, he gave each of them real money to trade, usually between $500,000 and $2 million from his own capital. The group became known as the Turtle Traders, named after Dennis's comment that he could grow traders just like they grow turtles in Singapore. What happened next proved Dennis right. Over the next 5 years, the Turtle Traders collectively earned over $175 million in profits by the late 1980s, roughly $500 million in today's money. Some of them went on to become trading legends in their own right. Jerry Parker, who later founded Chesapeake Capital,
managing billions in assets. Liz Chavelle, one of the few women in the group, who co-founded EMC Capital Management and became a pioneer in systematic trading. Tom Shanks, who went on to run successful trend-following funds based on the same principles Dennis taught. Their success wasn't luck. It was proof that Dennis's philosophy worked. You didn't need to be born a genius. You didn't need Wall Street access. You just needed discipline and a system, and the willingness to follow it. After the turtle experiment, Dennis summed up his belief in one now famous quote: "Even a monkey could be taught to trade successfully, if it followed the rules." It was a statement that shook the trading world, blunt, provocative, and in many ways, true.
Because in Dennis's eyes, the real battle in trading wasn't between people. It was between a trader and his own emotions. Fear, greed, impatience, overconfidence. Most traders lost not because their systems failed, but because they failed to follow them. The turtle traders proved that humans could overcome those impulses if they trusted the system. And that brings us back to Dennis's genius. His gift wasn't inventing some secret formula. It was recognizing that structure beats emotion. He turned $1,600 into $300 million. He created a generation of traders who built funds worth billions. And he left behind a legacy that still shapes the world of systematic trading today, from hedge funds to algorithmic systems. So the next time you hear someone say, trading is all about instinct, remember Richard Dennis, the man who taught complete beginners to beat the markets. And then ask yourself, if even a monkey can learn to trade by following the rules, are you smarter than a monkey?
Part 2. The Billion-Dollar System. Now that you know who Richard Dennis was, let's break down how he actually did it. The system that built his $300 million fortune and turned everyday people into millionaire traders. Here's the shocking truth. His method wasn't complicated. In fact, it was so simple that most traders at the time dismissed it as too basic to work. Dennis relied on just two mechanical systems, both based on a single powerful concept called a breakout. A breakout happens when price escapes from a recent range, breaking above its highest point or below its lowest point. It's the market's way of saying a new trend has begun. That's all Dennis cared about, catching trends early and riding them for as long as possible.
System 1. The short-term 20-day breakout. This was the faster system, designed to catch shorter-term trends. Buy when price breaks above the 20-day high. Exit when price drops below the 10-day low. Sell short when price breaks below the 20-day low. Exit when price rises above the 10-day high. Simple rules executed with robotic consistency. This system helped capture quick market movements, sometimes lasting only a few weeks. Dennis used this for faster-paced commodities and markets that reacted quickly to news or seasonal patterns. System 2. The long-term 55-day breakout. The second system was slower, but it was the one that produced massive, life-changing trades. Buy when price breaks above the 55-day high. Exit when price falls below the 20-day low. Sell short when price breaks below the 55-day low. Exit when price rises above the 20-day high. This system was designed to catch the big, sustained moves, trends that could last for months. It didn't fire signals often, but when it did, it often led to the kinds of trades that made millions. Dennis and his turtle traders used these exact rules to ride enormous market waves, from the grain markets of the 1970s to the currency trends of the 1980s, and even the bond bull markets that followed.
The power of simplicity. Now here's the part most people don't believe. It really was this simple. No complex indicators, no insider information, no magic formulas. Just rules
patience, and discipline. Dennis wasn't trying to be right on every trade. He was trying to make big money when he was right and lose small when he was wrong. That's what made his system so powerful. He once said that a good trend-following system could have a win rate below 40% and still make a fortune. Why? Because the winners were so much bigger than the losers.
The core rules behind the system. Let's look at the principles that made Dennis's method unstoppable. 1. Follow the trend. Don't predict it. Dennis ignored forecasts, headlines, and analyst opinions. For him, price action was the only truth. If price was moving up, he bought. If it was moving down, he sold. Simple as that. 2. Absolute discipline. Once he had his rules, he followed them like law. No emotions, no gut feelings. Breaking the rules, even once, could destroy months of progress. 3. Cut losses fast, let profits run. Dennis risked only 1 to 2% of his account on any single trade. That meant many small losses were completely fine because it took just a few massive winners to make up for everything. 4th, think in probabilities, not perfection. Even modern legends like Christian Kwalamagi, who turned $5,000 into $100 million, echo the same truth. My trading journal is mostly losing trades with a few big winners. Dennis understood that being consistently small and disciplined beats being occasionally brilliant. 5. Diversify across markets. Dennis traded everything that trended: commodities, currencies, bonds, and stock indexes. He didn't care what the asset was, he only cared that it moved. If a trend existed, he wanted to be on it. For new traders, though, Dennis advised focus. Start with 1 or 2 markets. Learn the rhythm, the volatility, the behavior. Once you master the process, then expand. The takeaway. So yes, his system looked almost too simple, but simplicity was the genius. While most traders tried to outsmart the market, Dennis simply followed it. He proved that great trading isn't about complexity, it's about consistency. 2 systems, clear rules, ruthless discipline. That's all it took to turn $1,600 into $300 million. And in a world where most traders lose by chasing the next big idea, Richard Dennis built an empire by doing the opposite. He found one idea that worked and followed it for life. Part 3. How to apply it automatically. Richard Dennis built his empire with a simple breakout system, and in his day, every calculation had to be done by hand. No computers, no fancy software, just price charts, pencils, and discipline. Today, traders have an incredible advantage Dennis could only dream of: automation. What once took hours can now be done in seconds. Let's see how you can apply his same principles automatically in the modern market. Take NVIDIA, as a real example from early 2024. We'll use Dennis's long-term breakout system, also known as the 55-day breakout rule.
Step 1. Set up your Donchian Channel. Open your charting platform, whether it's TradingView, Thinkorswim, or TrendSpider, and add the Donchian Channel indicator. Set the length to 55. The Donchian Channel, invented by Richard Donchian in the 1950s, plots the highest high and lowest low over a given period. It's exactly what Dennis used to define breakouts. The upper line marks the 55-day high. That's your potential buy trigger. The lower line marks your short trigger or stop reference. In this setup, you'll see price moving within those bands, waiting to escape. When it breaks out, that's when trend followers strike. Step 2. Add a 20-period EMA, exponential moving average. This simple line smooths out price noise and helps you trail your stop. Dennis's original rule was to exit when price closed below the 20-day low. But modern traders often use the 20 EMA instead. It reacts faster, adapts to volatility, and can be automated in most trading bots or scripts. Step 3. The breakout signal. In January 2024, NVIDIA broke above its 55-day high, around $51. That was your buy signal. No guesswork, no emotion. Just a clear rule. Buy strength, sell weakness. If you are following Dennis's risk rule, you'd risk only 1 to 2% of your account. That means even if the trade failed, your losses were limited. A principle Dennis called the secret weapon of trend following. Step 4. Let the trend do the work. From that breakout around $51, NVIDIA went on a powerful run, gaining over 90% in just 43 trading days before pulling back in April 2024. When price finally closed below the 20 EMA, that was your exit signal. You'd have locked in most of the move, without predicting, without stress, just following rules like the turtle traders did decades ago. The modern edge. Today, you can automate all of this. Platforms like MetaTrader, NinjaTrader, or PineScript in TradingView can execute these rules automatically, entering on a 55-day breakout, exiting on a 20 EMA cross, and managing position size based on your account. It's the same logic Richard Dennis used to turn $1,600 into hundreds of millions, only faster, cleaner, and fully automated. The principle hasn't changed in 50 years. Find the trend, follow it, control your risk, repeat. Because in the end, as Dennis proved, you don't need to predict the future to build wealth. You just need to follow the rules when the trend arrives.
Richard Dennis proved something few people ever truly believe, that you don't need to be a genius to win in the markets. You don't need a PhD, insider connections, or a crystal ball. What you need is a system, one that keeps you disciplined when your emotions scream otherwise. You need patience to sit through boring days while trends build quietly in the background. And above all, you need the courage to follow the trend, even when everyone else doubts it. Dennis didn't gamble his way to fortune. He built it, brick by brick, rule by rule, turning $1,600 into over $300 million through the art of structured simplicity. So the next time you see the market moving in one direction, ask yourself, will you fight the trend like everyone else, or follow it like a turtle? Because as Dennis proved, the real money isn't made by predicting, but by following. If you found value in this story, hit the like button, subscribe, and turn on notifications so you don't miss the next episode, where we'll break down how you can build your own trend-following system from scratch. And if you'd like to support the channel, consider using Super Thanks or joining as a member. It helps us keep bringing you more stories, strategies, and lessons from the world's greatest traders.